Alright guys, well let's just jump into our charting. Let's just jump in. So weekly time frame pulled up. I'm going to start with the weekly per usual on Sunday night. What I want you to notice on the weekly time frame is that we did get a little bit of weekly SMT already. Where we look at our previous week high up here. Boom, right there. Boom, boom, boom. Previous week high, previous week high. Oh, I did the wrong line, guys. Give me a second. Right here, previous week high. Alright, there we go. Alright, so previous week high right there. I don't know why that was so difficult for me. Previous week high here on NQ or on ES. So already we have bearish SMT right off the bat, right? So what do I want to see from that? Well, right now we're still at all-time highs, so we still have to keep assuming that longs are going to be the move. All we have to do is just keep looking back at this weekly time frame, see that we got weekly displacement there. Here on ES as well, we got weekly displacement of any previous week highs. So everything is still so bullish that there's the only time we can really start to look for shorts is kind of like we talked about last week, but real higher time frame reversals, right? As of right now, we are not doing that. We're still staying extremely bullish. We even gapped up to start the week. But the stuff we do want to pay attention to is that SMT on the weekly time frame. So if we were going to have a reason to start dropping, that would give us at least a little bit of confluence for some kind of reversal. Now, obviously, you can't just look at SMT divergence as the sole reason for a reversal, or else you're going to get caught in a lot of traps. If you're trying to just trade SMT, 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 there's too many SMT divergences in the market to take them as your sole reason. But if you can combine that with market structure, that's when you're golden. That's when you're looking for some good setups. So as of right now, a little bit of bearish weekly SMT to open up the market. Obviously, we just opened up a little bit ago. But on the weekly, we still are looking bullish. So we do want to pay attention to ES to see if it's going to go take out that previous week high, or if it's going to fail and start to drop a little bit. So let's go down to the daily time frame. Let's start checking out the daily. All right, so daily time frame. It's the same idea, right? Previous day high, previous week high. It's the same thing. So NQ is already sweeping previous day high. ES fails to do so. The other thing I want you to notice is on NQ, look how our Friday candle closed well above our Thursday candle, whereas on ES, our Friday candle did not close above our Thursday candle, showing that we had a little bit more possible reason to start seeing ES falling a little bit when it comes to our technical analysis. Now, still looking bullish. That's not an entire reason to start seeing a reversal, but it's another thing to note. It's another thing to pay attention to. When we see a failure to close above a previous high, especially a possible bullish daily order block right there, shows us a little bit that we might start seeing a little bit of pullback here, right? So that's looking at the daily time frame. I want us to chart out our previous day low as well, just in case we do end up seeing a drop. That's going to be a big target for price going through this week, maybe tomorrow, maybe Tuesday. If we were going to see bearish price action, we'd want to see us come back down to sweep that previous day low right here. Okay, so we got previous day low on NQ and on ES right there. Big range though, very big range on the daily. Another thing that we can do is use our Fibonacci retracement tool on this daily range. Now let's say we did keep expanding, right? Let's say we did want to keep expanding. You could use that fib on the daily range or even on a weekly range, and you could look to see, okay, different weekly profile. Are we going to pull back Monday, possibly Tuesday, down to a discount of our daily range here of just this daily or previous day candle? Or if we go to a weekly time frame, it's even better to look at the weekly time frame, right? So I want to look at our weekly range here. Are we going to come down to the midpoint of that weekly range from last week before expanding again? And if not, where do we want to go next, right? I like to look at the weekly previous candle to look at my standard deviations when we're at all-time highs, because we don't have anything to base over here. The only thing that you could really look at is actual order flow tools, right? If you're looking at where liquidity is resting, you can look at those tools to see where liquidity is when we're at all-time highs, because you can still see where orders are at. But when we're looking at purely technical analysis, I like to use this previous week candle to figure out where our next standard deviation levels are to see if that's a possible target for the longs to go next, right? And to expand the same exact type of expansion move that we saw the week before, and also to see if we're going to pull back to a discount of that weekly range. So go back to the weekly on ES as well, and just you don't have to do this, but it's something that I like to do just to keep an eye on, and you can even just chart out those levels. Like what we can do here, let's just use a line, just use this tool here. Let's go right to that middle. And what we're going to type out is weekly EQ, right? Our weekly equilibrium. And I'm going to make this line red. I'm going to make sure it's overlapping exactly with this level here. I might have to zoom it in even closer to make sure I'm getting exact right here. Right? So if you don't want it to, keep that on the charts, that's pretty close right there. So if you don't want to keep that whole fib on the charts, you can always do that and just type out weekly EQ, line it up, and you can even type out OTE range, right? That golden zone here as well. Just things to note, and you can also do the same thing over here for standard deviations. If you want to chart out these standard deviations and not have this big fib right in the middle of your screen, you can always do that too. But I don't mind having the Fibonacci there. It doesn't clutter my charts too much. But for right now, I'm just going to get rid of it while we're doing our other charting. Anyways, that's just kind of talking about weekly range. If we do want to pull back, where are we going to pull back to? That's kind of what we're paying attention to. So let's go back down to the daily one more time. Again, daily bullish order block right here if you want to chart this level out too. Boom, we do have a little bit of a bullish order block there on the daily time frame, but if we look at ES, remember we didn't close above, so we technically did not create this bullish order block here on ES, so a little bit of divergence there. But if you want to chart out that daily bullish order block, do that as well. It's right around that equilibrium of that weekly range, or excuse me, of the daily range right there as well. Okay, so let's go down to the 4-hour time frame now. This song is a little bit intense right now. I'm gonna switch the song. All right, so 4-hour time frame. I want to start looking at 4-hour imbalances here. So make sure you have 4-hour pulled up on both NQ and ES. Where's our nearest 4-hour imbalance? If we zoom all the way in, no imbalance here. Okay, down here looks like our nearest 4-hour bullish imbalance right here. So we have a 4-hour busy. Boom. If we go here, I'm going to find my 4-hour busy. Boom. Okay, so we got our 4-hour busy there. So if price was going to reverse, and let's say we started to run right through new week opening gap, and we're going to see some kind of pullback move, that's another major level that we want to start looking at. 4-hour imbalance right there. If we did want to pull back, I would expect us to try and come down here and rebalance this 4-hour a little bit, even barely tap into it before continuing higher, or coming down near that equilibrium. And then we start to look, okay, if we start running through that 4-hour further and further, now we're expecting a full higher time frame reversal, where we might actually come down for that equilibrium all the way down there. But as of right now, that's our only 4-hour 4-hour imbalance that's near us. And let's go down to the 4-hour on ES over here. So we had a little 4-hour imbalance here that we actually tapped into on ES. All right, so a 4-hour busy there as well. Chart that out right there. Okay, so let's look at the 4-hour. Same 4-hour imbalance right here on ES and NQ. Do we see the SMT divergence, bullish SMT, how ES tapped into that 4-hour and got a nice bounce. NQ failed to tap into that 4-hour and stayed bullish, right? That's something we really want to pay attention to. We do talk about SMT divergence a lot, but what we usually focus on is liquidity, highs and lows. What we need to start focusing on as well is imbalances. So you can see SMT divergence when it comes to these imbalances as well. So if we're looking at NQ and we really want to see NQ pull back, let's say to that 4-hour on this candle right here, and we notice that it's really staying strong, it doesn't want to come back down, but ES is dropping all the way down, tapping into it, that's bullish SMT divergence right there. That gives us a lot of confirmation that the longs are actually going to step in. So we don't even have to wait for the 4-hour on NQ to touch into that level. We just need to see if ES starts reacting. Then we look for our longs on NQ, or you could even look for your longs on ES as well. So when you're looking at SMT divergence, don't just pay attention to highs and lows. Start paying attention to imbalances as well. And you can even see it on the 1-minute time frame. There's going to be times where ES taps into a 1-minute busy and NQ doesn't, and we see NQ just start pumping before it comes back. And that's another confirmation where we start looking for the longs on NQ because we have that little SMT divergence, right? So that's something to pay attention to. And if you need to write that down, I would definitely write that down or start focusing on that in the charts. You could even type it out, or you could even do it right here. You could look at this low right here to this, and you could say SMT divergence right there, and then SMT, right? So that's a really, really important thing to notice. But if we do start seeing that reversal, like I said before, I do want to see us come down into that 4-hour again, or for the first time on NQ, and try to test that level, right? So especially because you guys can even see up here, remember that weekly SMT we have up there. ES is still failing to take it out, but right now we're still holding bullish structure, so there's not really too much we can, there's not really any shorts in play yet because we are still overall holding bullish structure. What I want us to do now is go down to the hourly time frame. Okay, so we're going to go down to the hourly time frame on both NQ and ES. Okay, what do we notice? What's the first thing off the bat? What do you notice I want someone to tell me. What's the difference between ES and NQ right now? Is there something that you can notice on the hourly time frame that there's a big divergence right now? Let me know. Let me know what you guys see. There's something on ES that we don't have on NQ. What is it? Okay, pullback, that's one thing. That is true. I'm looking for something different though. Not equal highs. Try to pay attention. Remember, okay, SMT is right, and why, but there's also an imbalance right here. Do we notice this hourly bearish imbalance? There we go, bearish for value gap. Boom, so you guys are all right. Those are all there, but what I really wanted to pay attention to is this 1 hour SIBI right here. Because we don't have that SIBI on NQ. So let's chart out 1 hour SIBI, right there. We don't have this level on NQ, right? What does that tell me? Well, we could start seeing a reaction. If ES respects this 1 hour SIBI here, if it does not close above, we start seeing a strong rejection off of this level, we get SMT at the highs. That's another example of a indicator of a reversal, right? But another thing that we want to point out is that the hourly closed above the equilibrium of this, right? This candle closed above the equilibrium of this hourly bearish for value gap. So that gives me a little less of a reason to start looking for a reversal. But still, as long as we're respecting this hourly bearish imbalance, there's a possibility that we start seeing that reversal when we combine that with bearish SMT divergence and an hourly bearish for value gap on ES, right? So something to pay attention to there. And then if you zoom in, you can see this SMT even better down here on the hourly. Look at this SMT we see right here. See this low right here? This is that low. ES comes down and sweeps it into the 4 hour, right? We have that same low right here on NQ. We never come back down and sweep it. Just another example of that SMT divergence right there. But on the hourly, if you just zoom out on this hourly time frame, look at how strong our bullish structure has been on the hourly time frame. I mean, really since right here. Pretty much, let's just say, yeah, Friday, November 29th. So just kind of to start the month of December, look at this super strong bullish structure where we never really come down, and not once do we get a market structure shift on the hourly time frame. So if you were ever thinking about shorting throughout any of this, right, any long-term kind of short position, not once did we ever get a market structure shift on this entire move, right, back to the downside. Okay, right here, we had a strong break of structure right here where we saw some nice pullback, right? But still, once you see this low right here not come down and make another low, that's when you know it. This is just a failure. This is just a fake out, I should say, and not a real move, right? Especially when you see SMT divergence right here as well. So let's go down. So again, you see a strong pullback like this. What's your first instinct? Short, 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 short. And now you could have still caught a decent short off this move. But once we start seeing another internal high or another high formed here, and then a higher high formed, well, I can't speak right now, a higher low formed right here, look at more SMT down here, guys. More SMT. Do we see this? This is that same level. ES right here sweeps the low and fails to make a actual close below this level. NQ fails to even sweep that low, so you have more SMT divergence right there. That's another reason to start looking for more longs, right? So SMT here, we pump up, we make another imbalance, we trade again, we get more SMT up here. So there's just so many reasons to keep looking for longs in this market throughout this whole move and to not be looking for shorts, especially when you see a move like this. You think this is the reversal. You think we're finally going to come all the way back down and drop and rebalance an entire weekly range. It's just a fake out move. It's just a little bit of a rebalance, small fake out move. And then you see that SMT divergence, you see a failure to make another lower low, so we only made one lower low, right? That's it. And then we made a higher low. Over here, we do make a lower low, but we don't get a closure below our previous low, So there's no actual indication of reversal there. It's actually more of an indication that price wants to continue higher. So another thing to pay attention to right there on the hourly time frame. Okay, so what did I say before? If we were going to come back down, we'd have to fight through this 4 hour if we're going to get a reversal, and our target liquidity would be this previous day low all the way down here where we had that SMT. That's where we'd be expecting price to go, right? Would be down to that previous day low right there. Okay, so both on ES as well. ES over here, we'd be expecting it to come down and try to sweep this sell side liquidity on the hourly time frame and then come all the way down for previous day low. But as of right now, my expectation going into tomorrow would be that we maybe get a pullback to that 4 hour, or we start creating better structure and then we pump again, right? That's still my expectation right now until we really start running through a 4 hour SIBI, until we really get a real market structure shift on the higher time frames. Still looking for longs and looking for a nice pullback that's going to come down and sweep internal liquidity or even some external liquidity and then move back up for the highs again, right? So in a trending market where we're at all-time highs, our main focus is internal to external. I mean, that always should be our main focus, is internal to external, internal to external. You got to write that down right now. If you don't know what I mean, write it down right now. Internal liquidity, remember, anything, my internal liquidity, what I look at is the 30-minute, the 15, the 5, the 1 minute, any time below that 30-minute time frame, I'm looking at internal liquidity. The hourly, the 4 hour, the daily, the weekly, that's all my external liquidity that I'm looking at. And I always want to see price moving from internal to external, especially when we're at all-time highs. If you can find it really difficult to catch a good trade because we just keep on running, and what we have to wait for is that pullback that's going to come back down and sweep internal liquidity and then make another move back up for external, right? And that goes into my entry model, into the GUI model. That's what we're always looking for, is an internal sweep that's then going to go target external, right? So keep paying attention to that. Keep thinking about internal to external, right? That's going to help you have a better understanding of the way this market moves, especially when we're at all-time highs like we are right now. Okay, so that's the hourly time frame. Not too much else right now that I'm really focusing on. We do have that hourly imbalance right here. We can look at that level, and you can also chart that level out if you want to. But besides that, there's not too much I'm paying attention to here on the hourly, except for that imbalance. And then obviously we looked at the SMT to see why we kept on pumping there. And then this hourly bearish SMT up here, we're going to pay attention to that too. But what I want you to do now is go down to the 15-minute time frame. Let's go to the 15-minute time frame on both ES and NQ here. So we have our new week opening gap right here. And if you guys don't know how to chart that out, what you can do is look up. If you go to indicators right here, if you click on indicators, and then you're going to type in NWOG right here. And what you want to look for, what I use is the Lux Algo indicator right here. Lux Algo ICT NWOG NDOG. And it's just going to chart it out for you. So new week opening gap is just whatever gap that we form at the new, right when we open. So right here, we closed from last week right here. Where do we open this week? Up here. So this is an entire volume imbalance that needs to get rebalanced at some point, but it can also act as a strong support or resistance level. So what I typically like to see is during Asia session, if we gap up, I like to see us run for buy-side liquidity. Right now, we only had this level, and what did we do? We ran for buy-side liquidity. And then if we want to chart out our SMT divergence up here, right, so chart out that SMT, and then look at ES over here, boom, SMT. So very steep SMT divergence right there. So what I like to look for during Asia session is for, if we do gap up, I like to see us run and grab buy-side liquidity up here, and then around 8 to 9 to 10 p.m. Eastern, it's usually around 9 p.m. Eastern, if we're going to reverse, I start looking for the reversal. And what I want to see happen to give me that confirmation that we are reversing is something like this, SMT divergence, maybe a reversal pattern on a lower time frame like the 15 or the 5-minute time frame. And I also like to see us run through that new week opening gap. And if you want to be very conservative, what you can wait for, if you were going to short, because we do have a lot of low resistance liquidity right here, there's a ton of sell side liquidity that price can definitely run down for if we are going to see that pullback. What I would like to see, if I'm going to be very conservative looking for a reversal, is I like to see us come back down and fill the entire new week opening gap and get a close below and really prove to me that we're going to keep going down for that sell side, right? So we have the SMT. Right now the timing isn't aligned right now. because right now it's still only 7:20, right, on Eastern time. I like to see the reversal start happening around 8 to 9 p.m. Eastern. That's when I start looking to see if we're going to reverse. Now let's say we get a gap up and then we're going to see a continuation overnight. What I like to see is for price to come back down and retest new week opening gap like this, trade back into it, maybe test the equilibrium of this volume imbalance, and then start seeing some inversion back up where we're disrespecting bearish order flow, and now we're coming up to make higher highs, right? So again, I'll repeat one more time. 9 p.m. Eastern is when I'm waiting for the reversal. After we gap up, I want to see if we can run through new week opening gap and start making lower lows, targeting sell side liquidity. If we're going to see an Asia continuation, I want to see us test new week opening gap, come back down, respect the 50% level, and then get a bounce and a rejection and continue higher. Right? So that's what I pay attention to, and I usually don't look for that until around 8 to 9 p.m. Eastern. Okay, so that right now on the 15-minute time frame, that's what I'm looking at. And then again, you want to chart out all of this low resistance liquidity. So what you could do, if you wanted to, you could chart out this low right there as sell side liquidity here. Oops. Boom, sell side liquidity right there. You could chart out this low as sell side liquidity. All these swing lows are going to be your internal sell side liquidity. Remember how I talked about internal to external? So if we wanted to come back down, I'd want to see a sweep internal liquidity before we come back up for external liquidity. So these are all low resistance liquidity levels. Right there. You don't have to chart these out, but you can keep charting them out. If you want to be very clear on where liquidity is, just chart out all of these lows so that you're very, very clear on where liquidity is resting. And then down to this low. So remember, liquidity, swing lows, swing highs. That's where we're looking at that sell side, buy side liquidity. So you could chart out every one of these swing lows right here as a possible target for price to come back down to if we were going to see a reversal. Okay? I usually don't chart out all these levels. I look at the main levels like the hourly, right? So if I was going to go to the hourly time frame, I would chart out this level as relatively equal lows right here, external liquidity. I don't think I would chart out this level too much. I'd want to see more of a clear swing low. So I would chart out this low down here as my next external level beneath this swing low here. So that would be two external sell side levels that price could come back down and target. That's what I would be looking at. Alright, sorry guys, let me look through some of the chat. Let me see if you guys have said anything. What's up, King Plot? Hey, there you go, man. That's good to hear. Hey, Jared, what's up, dude? Welcome, brother. That's what I'm talking about, King Plot. Good stuff, dude. Very happy for you, man. Getting that breakthrough is probably the best feeling of all time. Like once you finally start breaking through, it's like your eyes are opened like they've never been before. Like once you finally get that breakthrough I mean, in my opinion, probably the best feeling in the world is once you finally it clicks. You're like, oh my gosh, I understand this now. I understand this. So I'm very happy for you, man. It's good to hear. All right, so 15-minute. Let's look on ES as well. Let's look on ES. Let me go back to the 15. Let's see if we got any SMT divergence. Did I already try out this SMT? We had more SMT even right here. Oh, I already tried out that SMT. But if you look at this high right here, that's also more SMT divergence as well. I think I already charted it out. But if you look here, boom, and ES failing to sweep that high right there. A lot of SMT divergence going on, a lot of bearish SMT. So we want to see if price is going to start running through new week opening gap now. So now we're testing it. So this is when we're going to start to kind of understand how price is moving tonight. If we start running right through new week opening gap, we're going to start expecting some more bearish price action. If we keep making lower lows, if we look at the 5-minute time frame, if we make a bearish breaker block here, a high, a low, a higher high, if we come down and displace these lows and get a close below, now we're expecting us to run down for all of this liquidity here, this low resistance liquidity, and possibly all the way down to the 4-hour. But if we come down and test new week opening gap here, and then we start getting inversion of bearish levels, now we're looking for the longs to step right back in. So this is a very key level that we're seeing being tested right now. So you really want to pay attention to this new week opening gap, how price reacts off of it, if it does react off of it. Right? So just looking at the 15 again on ES, 15-minute time frame. New week opening gaps down here, a lot smaller of a level on ES than it is on NQ. And this is still SMT divergence right now as well, guys. NQ's testing new week opening gap, ES is not. So a little bit of S&T back and forth. But remember, the higher time frames over the lower time frames. You always want to focus on the higher time frames first over the lower. Remember what I said earlier about this hourly bearish imbalance. Notice how we're dropping from the hourly now. We got that bearish S&T up here. We trade into an hourly SIBI on ES. We're starting to drop. So a bunch of S&T divergence, a bearish imbalance. Now what we have to see is if price is going to actually start running through new week opening gap on both NQ and ES here. You can start looking for reversal patterns on the 15-minute. High, low, higher, high. If we get a displacement of these lows, bearish breaker block, right? So you're looking at between the two levels, between NQ and ES, you want to see if we're going to run through the equilibrium of this new week opening gap. If we're going to start making lower lows, if we're going to make reversal patterns. Remember, I don't instantly start looking to take the shorts off of S&T. I look for a reversal pattern after S&T. Look at these shorts going right now. Look at these shorts starting to go. Again, you don't want to get faked out by this move if it's not truly the reversal. That's why I don't care about really this move right here, because I would still be waiting to see if we're going to run through. But let's say the 5-minute or the 15-minute does come down and close beneath these relatively equal lows. That's when I might start really looking for the shorts, especially if we get a close below new week opening gap. That's when I'm looking for price to run all the way down to that 4-hour busy, right? That's what I'm looking for. So let's just do a quick little recap of what I'm expecting for the week. I want you to either pull up Forex Factory or just look at Forex Factory that I have pulled up right here. We're going to look at news coming out. Starting tomorrow, I consider this a no news Monday because we only have, one yellow folder news event coming out. No news Monday. We might see range, we might see chop. Realize that. If tomorrow we come into the market and we see it's super choppy, super range bound, you might want to just walk away and not even take any trades. You have to be aware of what's coming up on each day, and if it's a low probability price action type of day, completely stay out of it, don't even touch it. If price action looks pretty good as we hop on the charts, we're seeing good moves, we'll still look to take a trade. Okay, going into Tuesday, still not too much going on. There's not too much, a little bit of news coming out. We'll see how Tuesday is. And then what I really am excited for is Wednesday and Thursday, because we have CPI coming out on Wednesday and we have PPI coming out on Thursday. And then Friday is also going to be a no news Friday where we have one yellow folder event. So I'm most excited for Wednesday and Thursday this week. Why is that? Because these news events, CPI and PPI, tend to give us the best price action, in my opinion, pretty much of any of the red folder news events that come out consistently. I think CPI and PPI offer the best results and the best price action. Because what do we typically do? We create a data high. When the news comes out, we create a high and a low. Almost every single time we have CPI and PPI data come out, we sweep the high and then we sweep the low, or we sweep the low and then we sweep the high. Almost every single time. It's pretty automatic. So I really like trading that price action. So I'm kind of excited for Wednesday and Thursday. But again, don't overlook Monday and Tuesday. But what you want to pay attention to is there a lot of news? Give the market about 30 minutes. If the market is super choppy and range bound after the first 30 minutes of open, close your computer, walk away, don't even trade. Same thing with Tuesday. If it's super range bound within the first 30 minutes to the hour of the day, after market open, close your computer, walk away. Don't even risk trading in low probability conditions. We saw what happened last week. Very tough price action to trade. You don't want that to continue on to Monday and Tuesday because you can't just have some patience and just wait and see if price action is going to be good. So that's why we look at the news, because if you don't pay attention to this news, you can get caught up in some really bad price action, right? So going back to technical analysis, back on the weekly time frame, right here, we're already starting to turn a little bit bearish here on NQ on the weekly time frame. Again, we still look bullish overall. Obviously, we are bullish. On the weekly time frame, we are bullish. I mean, we keep making higher highs. We keep getting displacement. Yes, we're expecting longs to step in. But what I want, personally, is to see a nice pullback move in the market this week. I really want to see some bearish price action so that we can catch some real moves with some good reward, because it can be kind of difficult to trade those all-time highs. But we have to expect one thing and react to the other. So right now, we're expecting the longs this week, and then we're going to react and be ready if the shorts are going to take control, right? So in the market, you never want to predict, but you want to expect. We want to expect what we read on the charts, we expect it to happen. And then if something different happens, we don't get prideful and egotistical and get mad that we had the wrong bias. No, we just move on and we look for the next trade. So, or we look for that setup that goes against our original bias. So right now, I'm expecting the longs, but I'm going to react to the shorts. I wouldn't be surprised if the shorts did step in this week a little bit. Like I said, to come down and maybe try to tap into that discount of this weekly or previous week candle. But expect the longs, react to the shorts, right? Expect the longs, react to the shorts. Everything looks bullish, so we're still looking for bullish price action this week. Tomorrow might tell us a lot. If we start to see really good bearish price action with a lot of displacement to sell side, and we're really moving good, we're going to start looking for shorts to come rebalance the market. If not, we're waiting for nice pullback moves to come sweep internal liquidity. We're getting in the longs to go sweep our external liquidity. That's on the buy side, right? So that's my mindset going into this week. Again, after having such a tough week this previous week, I put it completely behind me. I spent time this weekend to kind of rebalance my mind a little bit. I spent some time enjoying myself and kind of freeing my mind. And then I also spent some deliberate time journaling and thinking about the previous week and how I'm going to improve going into the next week. And what I like to do is remember that last week is behind us, and I've talked about this before. What does the past bring us? It brings us depression. What does the future bring us? Anxiety. What does the present bring us? It brings us peace, right? So we're going to keep focusing on the present. We're going to be prepared for the future, but we're going to put the past behind us. We're going to learn from it. So hopefully you guys have journaled what happened last week. Hopefully you've learned from your trades. Hopefully you've learned from the market conditions. You've learned something about yourself mentally. So now going into next week, starting tomorrow morning, you are locked in, you're ready to go, and you're ready to kill it. All right, guys, that's what I have for you tonight. I'm extremely excited for this trading week. I'm excited to get back into it. This weekend, honestly, was a really long weekend for me because I just kept thinking about how I was going to do better than this coming week. I just couldn't wait. I'm excited for this week. And again, we have to control our emotions still. As excited as we are, as depressed as we are, we have to control those emotions no matter what and stay even keel, all right? Exactly, Crixus. Last week never even happened. I don't even know what last week was. There wasn't a last week. King Plot, you asked, can you show us an example of your models in a low time frame where your higher time frame is like the 5-10 minute? I don't use the seconds chart, so I won't be able to show you an entry there. I always use the 1 minute for my entries, but I'll show you my entry model right now. We can go down, I'll look for my entry model here. So the first thing you want for your entry, for my entry model, for the GUI model, is a higher time frame level that price is going for. So we might have a bearish example actually. We'll have to look and see if we do. But right here, let's just say for shorts, we're looking for price to come down and sweep these hourly relative to equal lows, right? That's our target. Our first thing is a bias and at least a draw on liquidity. Where's price wanting to go to next? Then we drop it down to the 15 or the 5 minute time frame, and we want to wait for internal liquidity and an imbalance to form. So right now, we have a 5 minute SIBI right here. Okay, so we're going to chart out that 5 minute SIBI. What we want to see price do next is trade up into this 5 minute SIBI. Hey Jonathan, if you right click on the stream, you can turn the music all the way down. So 5 minute SIBI, right? We see the imbalance. We have our target on the hourly down here, equal lows. Now we go down to the 1 minute time frame and we want us to sweep internal lows right here, or internal highs. So we have internal buy side liquidity right here. If we can soup that internal buy side, trading into a 5 minute SIBI, the next thing I'm looking for is a bullish imbalance that forms a bullish fair value gap on the 1 minute time frame to form on this move up. As we make this move up, I want to see a bullish fair value gap form. I want to see a sweep buy side liquidity, and then I want to see us come back down and inverse that 1 minute bullish fair value gap and eventually come all the way down for the external lows. That might sound like a lot, but I did make an entire video breaking this whole concept down and this whole model down. So if you're still confused about it, what I would do is go watch that YouTube video, and if you go under Joe's lessons, you'll find that YouTube video, and go watch that and pause it whenever you need to. Take notes about it, because this model, I'm telling you, it's an amazing model. I use it for most of my trades. I use this model because it's so, I don't even know how to describe it. It works very consistently, let's just say that. Especially in this kind of market where you're waiting for internal buy side or sell side to be swept and you're targeting external. Sometimes what you want to do is you want to chase this move off the first 1 minute fair value gap you see, right? You want to jump into the shorts here because you want to get involved. But you're not waiting for the bigger picture. You're not waiting for structure to form. You need to wait for internal structure to form on the 1 minute time frame. So as we form that internal structure, like a swing high or a swing low, you wait for that, and then you wait for us to sweep that swing high or sweep that swing low, and then look for the move after that. But if you keep chasing this move right here, you try to get in the shorts right here, you would get stopped out very quick because you're not just waiting and being patient for the market to slow down and consolidate a little bit and then give us that next move, right? So that's what I would be looking for. Yeah, so if you wanted to, like let's say you did want to look for a 30-second entry. Again, I don't use it, so I don't even look at it. But if you wanted to use a 30-second entry, it's the same concept. You look for internal buy-side liquidity to form on that 30-second or even on the 1 minute time frame, and then you wait for it to be swept, and then you wait for that inversion on, like, let's say a 30-second fair value gap, right? So I'm always looking for my fair value gaps for this model. Usually on the 5 and the 15-minute time frame is where I like us the most. I like to see it the most. So right now we have the model. This is where we're looking. This 1 minute busy, if we get inversion of this 1 minute busy here, 1 minute busy, that's where I'm looking for the shorts, right? And if you wanted to get super aggressive, you would look for the entry right as we start trading below, right? Right as we start trading below, you get in the shorts, and you want to keep your stop above the recent high. Obviously right now you could keep a wide stop, but the conservative entry is waiting for us to close below that fair value gap to get the inversion, retest the inverse fair value gap, and then come down for sell side. Now right now, here's the one thing I don't like about the move, is the fact that we are bouncing off of new week opening gap right here. We got a rejection around that 50% level, makes me not like the move as much. And we can also look and see what's happening on ES. Well, ES is getting a nice rejection off the hourly. Let's see if it's forming the same type of model here. We did get SMT divergence here. If you look at the 5 minute, NQ tapped into that 5 minute while ES failed to. It's moving lower, and now we got this inversion. If we look on the 1 minute on NQ, we just got the inversion, so now the model is in play. So I'd be looking for us to tap back into that inverse fair value gap, and then I'd be looking for us to target this sell side right here at this swing low, recent swing low. And then I'd be looking eventually, like I said before, for us to go down and target the hourly equal lows right here, right? Now I just don't absolutely love the setup currently just because ES hasn't even tapped into new week opening gap yet. So I don't love it, but that is the model, and we'll see if it does play out. So typically you do want to keep your stop above that recent high that we formed there, which right now would only be like a 12-tick stop. So what you could do at this point, let's say you did want to get the entry, is first off, you need to see us react off of that 1 minute inverse first. You can't just get in just because we trade back into the inverse. You need to see a reaction off this inverse first. So if we start bouncing, that's when I start looking for my entry. And let's look at what our reward would be on this trade. Well, only about 34 ticks down to the first sell side level, and let's see down to full TP, only about 77 ticks. So it's not that big of a reward, but what you can do is keep your stop above VWAP up here and keep it at a 1 to 2, and maybe even keep it above the fair value gap over here, right? And that would give you a better entry. But as I said before, you don't just jump into this entry right when we tap into the fair value gap, right when we tap into the inverse. You need to see a strong reaction off of that inverse fair value gap before you jump in, or else you're just not respecting the model. You're not respecting order flow, because order flow right now is not respecting this 1 minute inverse. You need to see it respect the inverse and start to bounce from it before you really look for your entry. And that's why I will always give up a few ticks or a point or two on my entry to get confirmation that that move is actually happening, compared to jumping in off the first thing I see just because I want to get the perfect entry. I'd rather have a little bit worse of an entry to get confirmation that the trade is working out and it's going in our favor before, and instead of trying to get the perfect entry, if that makes sense. So as of right now, we closed above the inverse, so I don't love it as much. But again, the model is still there at the moment. We still look bearish. I just don't like the fact that ES hasn't traded down into new week opening gap yet, and that we're seeing a reaction off 50% of new week opening gap. So I probably wouldn't trade this right now myself. I probably would stay out of this personally, But the move, the model still looks decent right now. The model still looks decent. Can you show us an A+ example from today or Friday of your model in very lower time frame? Yeah, I'm not going to go on to the seconds chart, but I could show you it on the 1 minute chart from Friday. We had the GUI model on Friday. That was pretty nice. It was a pretty nice move on Friday. Let's see where it was. I think it was all the way down here. Yeah, right at market open. Right at market open. I didn't say I don't like the seconds chart. It's just not what I trade. I found that I like the 1 minute time frame the most for my entries, so that's what I stick with. So I have nothing against the 30-second, the 15-second. That's just not the way I trade. For me, it's too much noise. It's just not my thing. But I know it works for a lot of people. So if it works for you, that's all you, man. You go for it. But right now, that's just not what works for me. That's not what I like to use. I like to use the 1 minute. But let's look at this GUI model from Friday morning. Actually ended up being a pretty nice. Why did we go so far away? Pretty nice entry model here. So the first thing you look at is right here. We trade into this 5 minute busy right here. You guys see this 5 minute imbalance? This is going into market open on Friday. We trade into a 5 minute bullish imbalance right here. We actually sweep internal lows on the 5 minute right there. So right there you can see we swept internal liquidity right there. And let's go and look at ES as well. So right here, oh, that's not market open. Where's market open? Oh, right here, yeah, because we got SMT divergence here. So we got SMT divergence because ES failed to take out that low as well. So we sweep internal liquidity on NQ. ES fails to, so we get SMT. So another confirmation that the longs want to keep stepping in. Okay, that's the first few steps. SMT divergence trade into a 5 minute bullish imbalance. Sweep internal liquidity on NQ. Cool. Now we need to go to the 1 minute time frame. And we need to look for inversion. So the entry is off the inverse fair value gap where, let's see, where's market open? Market open is right here. Okay, so we got this 1 minute SIBI right here. Let's see. 1 minute SIBI. And you had to take the aggressive entry on this move because we never came back down and retested that inverse fair value gap. So you had to take the entry right as we started to trade through this 1 minute SIBI. So right here, you have to take your entry right as we start trading through on this aggressive move because look it, we never come back down and retest. So there wasn't another entry opportunity throughout this move here until all the way up here. And that was not as good of a move from up here. So if you look for this entry off the GUI model here, look, internal sell side sweep, trade into a 5 minute busy. SMT divergence at the lows, and then inversion of a 1 minute SIBI, boom, that's your entry right there, and then you're targeting previous day high or external liquidity, right? So you're targeting these highs up here as this was the previous day high from Thursday. Right there that's your TP right there. Boom, that's the move. So that's the model right there that played out on Friday. Sadly, I was looking away, I was looking at like a 15-minute time frame after this move already happened. So I come back to the 1 minute chart and we're already up here. So I couldn't get my entry where I wanted or else I would have been chasing this move. But I would have loved to have taken the move, but I ended up not taking any trades on Friday after that, after missing out on that entry. But I did still call out the model on Friday morning to everybody. I just didn't get the entry myself because we missed out on the initial. And then after that, there wasn't any great entry models. The only decent entry model was this one right here. It was just a 1 minute fair value gap, not even much of a model at all. So I didn't want to trade the chop. But it was still a very solid move from market open right there. So that's an example right there. Of course, King Plot. Hey, what's up, Connor? How you feeling about this week? I'm feeling good about it. I want to see better price action. We have CPI and PPI data coming out Wednesday and Thursday, so I do really want to see that price action look a little bit better. Monday, Tuesday, no news, not much news, so I don't know what to expect. I think we might see a little bit slower price action, but what's crazy is like the past month or two, and guys, going back to it, this is why I still don't really trust that move right there. Because of what? Remember, two reasons I still didn't trust this move, because ES hasn't even tested new week opening gap yet, and NQ is bouncing around equilibrium, right? So that's why I wouldn't trust those shorts there. Even with my entry model, that's not something that I would trust, and that's why I didn't look to take that move. But anyways, Monday, Tuesday, we would expect slow, choppy consolidation, right? But if we've looked at the past month or two, on No News Mondays, we've seen really good price action. So I'm really hoping we do see that. I don't know for sure. We'll see. We're gonna go into Monday and Tuesday expecting consolidation, expecting bad price action, and then we'll see if we do get that good price action to start looking to execute our trades. And then Wednesday, Thursday, I'm expecting solid price action, PPI or CPI, then PPI. Friday is also kind of a no news day, so Friday will be interesting. So our main days that I really want to kill it this week are going to be Wednesday, Thursday. Monday, Tuesday, we're going to be conservative. We're going to make sure price action is good. We're going to read the market. Wednesday, Thursday, we know what to expect with our data high, data low. Friday could be a little bit all over the place, so we're going to be very conservative on Friday as well. Last week was wild. Oh my gosh, I know, dude. Yeah, last week was my worst. That was my worst week of the entire year. Worst week of the entire year. And again, I talked about it a lot last week. I talked about it on Friday. And when I was looking like on social media, I was talking to other traders. Everybody was getting wrecked by the market. There was very few people that did really good last week. If you did, that's amazing because it was not an easy market to trade. Because here's the deal, we had our entry models. We knew our bias. We had our levels. But manipulation was insane, and it would manipulate when you usually don't expect price to manipulate. Right? So even with the great entry models, even with our bias being correct on every single trade, even with everything lining up perfectly, it still doesn't work out because price wants to manipulate more and more and more. And there's nothing you can really do about that except for staying out of the market, right? Or trying to get your entry wherever you're, if you wait for that next manipulation, but that's hard to do because you really don't know if that's going to be another manipulation or if we're just going to go, if that's going to be another manipulation or if we're just going to run to the next liquidity level, right? So again, I talked about last week, we're putting it behind us, and you can't think of yourself as lesser of a trader because of last week, because everybody got wrecked. Almost everybody got wrecked last week. So again, you can't think of yourself less. You're not a bad trader. You know what you're doing. You're going to do good. Last week was just a test to see if you're really in this for real or not. You know how many traders probably quit after last week? I can imagine thousands of traders walked away from the market last week. They might have quit trading for good because they don't understand that that's 1 week in the entire year, one bad week, that's it, right? People don't really understand that this was like the hardest week of the year to trade. So again, don't let that hold you back. Put that in the past, forget about it. We're moving on to next week. Thanks, Connor, appreciate that. Yeah, NQ did not want us to win. NQ did not want us to win. Alright guys, that's all I got for you tonight. I'm going to go eat some dinner, and then I am going to watch the Chargers game tonight. I'm excited for the Chargers game. I'm going to relax a little bit, eat some food, watch my football team play, and then get to sleep and get ready for the morning, guys. Get ready for this week. King Plot, I'll have to do that another time. I'll do that another time on the seconds chart. I'll do that another time for you. I'm gonna have to do more of studying on the seconds chart before I teach you to do it, because that's just not something that I trade. So I'm not gonna teach you on the seconds chart if it's not something I use. Hopefully you understand. All right, guys. Oh, wait, what was the question? Sorry, I didn't see that. What are your thoughts on scalping, specifically 1 minute time frame? I'm a scalper, guys. If you think about it, we're all pretty much scalpers. If you take a trade and you sell it within an hour or even 2 hours, that's technically scalping. Using the 1 minute time frame, that's what I do. But if you're not looking at the bigger picture, you're going to take a lot of losses. If you're only paying attention to the 1 minute time frame, I don't recommend it, because you're going to miss out on the bigger picture. You're going to miss out on the market narrative. You need to see what the higher time frames are telling you. And again, I'm a scalper. We're all scalpers here. If you follow my trades, again, if you sell your trade within an hour or a few hours, you're still scalping technically, right? So I don't recommend only looking at the 1 minute time frame, because you're going to miss so much. You're going to miss the entire picture. All you need to do is look at the weekly, the daily, the 4 hour, the 1 hour. Once you understand what those time frames are looking like, where we want to go on a higher time frame, dude, that's what I do every day. I drop it down to the 1 minute, and I'm taking my scalps on the 1 minute time frame every single day. So I love scalping on the 1 minute, but you gotta have that higher time frame bias. You gotta have the higher time frame bias. And if I only focused on the 1 minute time frame and didn't look at anything else, I would probably lose like over, I would say maybe like 70-80% of my trades. Again, because you don't understand where the market wants to move on a higher time frame. And there's so many manipulations on the 1 minute that if all you have to do is look at the 5 and the 15 minutes sometimes, and you'll stay away from those manipulation moves on the 1 minute, right? If that makes sense. Hey, what's up, Christian? And guys, again, I recorded this whole session. I'm gonna start uploading it right after we're done here. So if you want to go back to this, go back and watch it. Take some notes. Make sure you're really prepared for this week, and you have your mentality is in the right place. Your risk management plan is already prepared for this week. You're not gonna go into market open tomorrow with no idea of what you want to risk or how much you're trying to make. You need to make sure that's dialed in before you sit down in front of your computer tomorrow morning or before the market opens. Make sure you know your whole risk management plan. Make sure you are in a good place mentally, you're ready to go, and then start looking to execute your trades. Exactly, King Plot. Indeed it was, Christian. Indeed it was, man. And now we put it behind us. So I was saying that earlier, right? What did I have to do this weekend to get back into a good mindset? Well, first of all, I had to take it easy. I had to relax a little bit, enjoy myself, understand that it's not the end of the world. One bad week is going to happen. And did some stuff that I enjoy to do so that I can find my balance, find my peace. And then what did I do yesterday and this morning? I decided to do my reading. I decided to take my cold shower. I decided to journal and do a little bit of meditating to make sure that my mental was in the right spot. And now I'm ready to go into next week completely refreshed, right? No, King Plot, all of our trades last week were very A+ setups. There's maybe one or two, I would say maybe one or two weren't the best, but I think every single trade besides maybe one or two were all A+ setups where we were patient, we waited for the right trade, and the market just did not want to follow through. So that's the thing, is I didn't really have to think about fixing anything. The only thing I really journaled about, this was the main thing I journaled about, was just staying out of bad market conditions, because I definitely could have held myself back from losing a little bit if I realized a little bit earlier the market conditions weren't going to be that good. That's what I mainly journaled, and that's going to be my focus going into next week and to tomorrow is, okay, if tomorrow is really bad again like last week, I'm not even going to take a trade, right? I'm not even going to take a trade. I'm just going to stay out. Same thing on Tuesday. If it's the same thing as last week, I probably won't take a trade, right? So that's the mentality I have going on for the rest of the month. That's really the main thing that I took away from last week. So the A+ setups were there, King Plot, but the market wasn't following through on the A+ setups like it usually does, right? So we would have our setup, we would take our trade, and then price would manipulate right back for about, let's just say 50 to 100 ticks, stop us out, and then it would make the move, and then it would look good again, and then it would manipulate back down again. So just like kind of that theme of not following through like the market normally does, a lot of manipulation. So yeah, the bias was always there. We always had the right bias. All of last week, we had the right bias. We had our A+ setups, but there was no follow through, right? So there's not anything I'm going to beat myself up about, because again, I still stuck to my plan. I didn't go past my, my daily loss limit. None of that. I didn't go against my rules, anything like that. It's just the only thing I really took away, or the main thing I took away, was just staying out of the market when I see those conditions, right? So that's now what I'm going to do moving forward. No, it's a valid idea. I might start looking into it a little bit now that you bring it up. I'm definitely open to looking into that. For sure, Connor. Hey, go Chargers. Big game tonight, man. Big game. I'm excited for it. A little bit nervous, but excited. Interesting. All right. Well, I'm going to start looking into it then. I'm going to start looking into that then, King Plot. That's good to hear. Alright guys, well, that's all I got for you tonight. Go take care of yourself. Get ready mentally for this week. Let's have a great week. Let's stay positive. Remember, patience and discipline is everything. That's what we're going to focus on this entire week ahead of us. If the market sucks, then we stay out, all right? If the market conditions are bad, we don't touch it, all right? That's my mindset going into this week. Remember, right now it's about conserving, holding on to your money. When the opportunity presents itself, you jump in, then you look to make some money. All right, guys, have an amazing rest of your night. God bless you all. Thank you for joining up. I will catch you on tomorrow to my exclusive members. I'll catch you on tomorrow at 6:15 a.m. PST. I appreciate you guys. Talk to you tomorrow. Peace.